Legends. Welcome to the Daily Buyer Show. We go through all charts, all markets as they relate to crypto. Oh, I better get my screen running. Thank you for joining me wherever you are. Richard, there he is. How are you, legend? Sorry, I should have been a bit more prepared this morning. Let me get that up and running. There we go. We're up. It is the 1st of December here down under. I believe it would be the 30th of November. Oh, actually, maybe it's the 1st for you, Richard. I know it's pretty late. Probably the 1st, probably still the 30th for most others in other parts of the world. So, kicking off December, let's talk about the month ahead. We're in for a pretty volatile few weeks. Yeah, I bet it just ticked over there for you. We're in for a pretty volatile couple of weeks because we're coming into the year end and we're in this phase of the cycle where, based on my current analysis, we've transitioned bearish on the macro timeframes. And we've got a lot of macro catalysts coming into the year's end and seasonality that could drive a massive counter trend rally, or it might not. If they don't come to fruition, it might not. We might get a much smaller move because Bitcoin's bound to give some type of relief at some stage. Basically at this point in time, we're about to get the final major catalysts for the year that likely sets the direction of definitely the rest of the month, but potentially into Q1 as well. So if we just quickly go through the macro roadmap, after I jump off this stream, I'll post my weekly update in Substack where you guys will have access to this. So week one, we've got Bank of Japan Governor Ueda speaking. That's key in understanding sentiment read on potential hikes or just the rates for the yen and how that'll impact the carry trade that we've discussed in previous streams. It's the ADP payroll, so it's not the main payrolls. However, it is still a data point that's likely to drive volatility this week because labor data is the main data that Powell and the Fed are looking at to determine the trajectory of rates, which at the moment is still pretty tight, right? We're still in that high rate environment. So this week, those are our two key events, with the main event of the month being the FOMC next week. Now, right now, we're still sitting high up at that 87% probability of a cut. It's been pretty volatile over the last month. The expectations for cuts, hence the price action across markets has been quite volatile as well. Where did I go? Lost that. However, that'll be our main event, right? And at this stage, it seems all but certain that we are going to get another cut, but it's still pretty gentle easing. It's not really aggressive cuts. And as always, Powell's tone is likely to set the direction into the year end, right? Because if you think about how we go into these meetings, the market is pretty accurate in determining their probabilities of what's to come. And quite often, the rate cut announcement comes out, I think it's about 30 minutes before the actual FOMC presentation, or what do you call it, the press conference goes live. And the market usually already knows what the result is, but it's when Powell speaks where the volatility comes, right? Because you got the speculative nature of the market shuffling around and jumping around based on every word that Powell says, determining if he's going to be more dovish or if he's going to be more hawkish and what's their current stance and what sort of data they're looking at. Ultimately, everyone's trying to work out, do we get cheap money, expensive money, more money? Are they going to start printing? Are they going to start making it harder for liquidity to flow into markets? And hence we'll see that all play out over the course of not just during the press conference, over the course of next week, right? So quite often you'll find going into the meeting, we'll get that initial volatility, we'll get the cut that's anticipated at the moment. The first move tends to be some type of fake out at times, and we really just got to observe what happens over the course of the week. Now, over the following weeks after the FOMC, we've got some pretty heavy data. We've got the obviously the inflation, the actual payroll data. Then we've got Bank of Japan doing their policy rate announcement, and that's likely to shape up. All of this is likely to shape up what Q1 is heading towards. Now, oh yes, and in obviously in week 4, we actually have another FOMC minutes, right? And considering week 4 is towards the end of the year, most traders, investors, Wall Street's heading off for their Easter, Christmas break, that sort of stuff. It's probably thin liquidity. So again, more volatility. So it's likely that my read on this month is it's likely to be a highly volatile month, but the direction of Q1 is probably going to be decided over the next 2 weeks or so, right? So hence, what I'm specifically looking at is, obviously first and foremost, is how does Bitcoin structure develop? Do we get any type of meaningful bullish structure developing? Some basing, signs of inability to break down further and, kind of acceptance at this price, then some bullish structure building over time. And at the same time, do we start seeing net liquidity, which has now been ticking up since early November? Do we see that continued rise along with a Fed that's also, call it dovish or I guess aligns with looser liquidity conditions? Because ultimately that's what would be the setup that would suggest that we can be bullish again, right? When we've got that structure, Bitcoin structure, first and foremost, starting to give us some bullish structure, and it's then confirmed in the liquidity in the macro that the environment is setting up for another potential expansion. Because right now we don't have that clarity. The clarity we do have is confirmed bearish structure in the high time frames and the low time frames, and we've got tight liquidity, right? We've got a high rate environment still with an uncertain rate trajectory, and we haven't got a particularly dovish Fed right now. I'm talking about right now. I'm not talking about speculations of who the next potential replacement for JP is or all of that, because again, that's all speculation. I'm talking about what have we got right now and what does the data tell us. And the data tells us the environment's still reasonably tight at the moment, not the same conditions that usually drive parabolas, and Bitcoin structure is already bearish. So let's just jump straight into charts. Now that we've got that macro context out of the way, obviously the next 2 weeks is on watch for all of us. Let's jump into some charts. Now, it is Sunday, I believe, in the other parts of the world. Hence, Wall Street hasn't opened yet, but we do have futures open. So really, when we dig through the charts, it's all about looking at what's to come in this week and what do we need to be on top of. Net liquidity is obviously going to be the big one, because the other liquidity catalysts actually that I forgot to mention, if I cruise back up here to net liquidity, we've got that speculation of QT ending in December, right? So if QT actually ends, that should at the very least flatten out the balance sheet in the Fed and not keep declining. And if there is a rise in the balance sheet, that would drive further net liquidity. And we are starting to see in the TGA, right? So the TGA, remember that the TGA is like the government's wallet to tell us if they're spending or if they're well, if they're spending or if they're not spending. So we can see that when they're not spending and they're refilling their wallet, that drains liquidity from markets, right? We're seeing that start to turn over, and it's right at this approximate $1 trillion level that they seem to tend to like kind of refill to in the past. So that is starting to turn over. Hence, we've been seeing the liquidity and net liquidity. And the other thing I'll point out, I like to look at this chart from B Geometrics, because instead of just looking at the money supply, right, which we know is often just up and to the right, I like to look at the M2 growth year on year, because that gives a clearer signal. So if I turn this money supply off, you've got this black line, which is Bitcoin's price. And if you look at the M2 growth year on year, so this is basically giving you, I believe it's weekly. Yeah, every week it's showing you how the money supply changed versus the same week, same time period a year ago. And it just gives you such a cleaner signal, because you can see when the money supply, the growth of the money supply is accelerating, right? It means week on week, more liquidity is coming into markets, right? And this is looking at global growth. So it's looking at all the key central banks. So this is another good one I just keep an eye on, because if you just look at the last parabolas from bull markets, you see this rising M2 based on the growth, right? And you can see here where week on week, they're actually pulling money out. Because the M2, if you just look at the actual global supply of M2, you're not going to see that meaningful move here. If I take this off, how are you going to look at that and look at Bitcoin and start to see that there's actually meaningful changes in the way that they're piping in money or pulling it out of the system, right? You can't. But when you look at the M2 growth year on year, because it gives you that weekly view versus a year ago, it shows you how much they're putting in versus pulling out versus a year ago, you get a much cleaner read, okay? See the divergence if you're just looking at M2 supply. So this is where I see, I've seen, and I've been trapped by this in the past, in my earlier days, where I've seen people throwing around, oh, M2 off, up and to the right, you know, Bitcoin's going to follow. And it's a very slow signal. Maybe it's true, and obviously it is, I mean, over the macro time frames, but it's not really a practical signal from a call it a investment or a trading perspective, because it's going to give you, unless you're holding for 5 to 10 years, it's not going to, you know, it's less relevant. It's not going to give you a quick enough signal. So hence, if we look at, we'll take that off, M2 supply, we can see that here in June, we had that supply coming down, but we can see that supply is starting to increase again, right? So again, this is the kind of thing you want to see if we're going to expect some sort of liquidity come in. Now we can see the divergence. So if this keeps increasing, we should see it in our other charts as well. And to me, again, this is just confluence that we could get at least some type of relief or potentially into the counter trend rally that we're looking for if this keeps its rise. Now, if it turns over and we see this declining, you know, as we've seen in the past, then it's less likely that Bitcoin is going to be charging up or give us any meaningful rally. So it's just another signal I'm monitoring at the moment, aligned with the global liquidity picture. All right, so spreads aren't really going to give us much, but this is still on watch, right? Because we just want to, I like to look at the spread between the 10-year and the 2-year, because it just gives me a really easy and clean read on the market's anticipation and sentiment on, I should say the market sentiment on the economy and liquidity conditions. If it's rising, they believe that, typically believe that liquidity conditions are still going to be loose and potentially looser. But when it's declining, they're expecting potentially tight liquidity conditions. And dependent on how steep it is and where it goes, like below this 0 level is often where you get those recession concerns, right? So hence we're in this range. And as long as we kind of stay in this range and we don't break down this way, Again, that would support there still being some type of bid in line with the counter trend rally thesis that we have. If this continues up, that would be supportive of bullish. Down, bearish. Pretty simple, right? DXY, key chart that's still on watch. Historical pattern still in play. Last week, however, we had our first rejection kind of key. Actually, no, we've rejected here once before, but we did have a strong bearish week rejecting, right? So this week we want to see if there's potential follow through, and if you consider that a rate cut's more likely, we should see some potential follow through, because a rate cut means a weaker US dollar, right? So again, just a refresher on this key DXY pattern, there's still plenty of room for this to come down, and this historically would support a risk bid, but the pattern won't be invalidated until if I just jump back out on the weekly chart, until we're firmly below the weekly bands, right? Because we need bearish bands to suggest that the trend's going to continue bearish, but we need to see it trending back down below here, because here's where our base range is at the moment, where in the past we have stuck around in that base range for a while. So if we come back down here and then we head back up again, right, that would be normal behavior. And still, as we start heading back up, that typically means that capital is flowing. Capital, is that the right word? That typically means that participants are flocking back into the dollar, right? So they're either going risk off, or they're taking their profits for whatever reason. So hence, this pattern isn't truly invalidated until we're trending below here with structure. And but in the short term, the move down to the range lows does support the counter trend rally thesis. Right. We'll just jump straight into the indices, right? Because last week we had that test of the structure low, the daily structure low, and we had a really good bounce. Now we need to see if there's follow through, right? Because I've been flagging that we had the initial caution signs, okay, and we started testing the daily structure low. But on the high time frames, we're still bullish. Like there's no reason to be bearish yet. But the caution signs just warrant us to take a closer look and to make sure we're just tracking what's going on with structure. Because if we don't see the follow through this week, this could be turning into a bigger distribution, right? Where the distributions before a major turn in these bigger indices take time. They don't just turn quickly unless there's something catastrophically wrong. But even if we go back here to, this is the 2021, 2022, leading into 2022 bear market that we had, you see this takes, this topping sort of distribution took 238 days, right? We see the channel forming. It's not really making stronger highs. The breakdown, the bands, structure, all that sort of stuff, right? So it takes time. If we go right back to this is the GFC, right? Again, comes down, comes back up, tests the highs. There's your lower high. That was a big warning signal before we headed out. And still that took like this whole sequence almost 200 days. So hence we've been flashed a few warning signs. So we just got something to keep an eye on, and it just means we've got to observe price action around the key levels. We've tested the key structure low. Now, what do we do back at the highs, right? Back up here, okay? If we're doing something like this, and then we're coming back into this low again, then that would be very bearish in my opinion, because we've already had a test of the lows. Now we're having another test of the lows. Is this the the biggest signature that we're heading lower. Again, on watch, high time frames remain bullish, so no reason to turn bearish yet. We'll just keep observing the signals. Now the ES and the NQ, so the S&P and the NAS, are similar signs. The key signal we're tracking on the S&P, also the SPX or the ES, whatever you want to call it, right? This is just the S&P 500. The key signal that we're tracking here is if Nvidia diverges bearishly from the S&P, because that's our signal that there's potentially some weakness under the hood, right? So ideally, if you're to be bullish, you want to see Nvidia pick up, because the S&P's picked up here, right? But the Nvidia didn't really pick up. So it's starting to diverge, but it's still early. So hence, this is on watch. All right, markets will open tonight for me, tomorrow for probably most of you guys. And, you know, it'll be interesting to see if we get that follow through, what Wall Street looks like this week as we lead into these volatility events. All right, Nikkei, we'll take a quick look at the Nikkei. Yeah, same. We're seeing all same. I'd say slightly more bullish because these are much cleaner sweeps of the low. But we still do have this bearish internal structure. Okay, so it's still bullish here. Above here would invalidate this internal bearish structure. Okay. But right now it's in just a complex pullback, so no reason to be bearish structurally unless it's back below here and doing this sort of thing. But the Nikkei and the USD JPY are the two things that we've got to keep on watch this month, and as it relates to the Bank of Japan, right? Because if it's a big if, and I don't know the ins and outs of the Japanese economy. I actually don't study it close enough. Like, I'm not good with how aligned the Bank of Japan are with the government and how they usually operate. I don't watch it as closely as I do the Fed in the US. But the USD JPY and the Nikkei is where we'll see almost the signals and the signs of what the market actually thinks about the actions of the Bank of Japan. And if we get this breaking down, the USD JPY is in some sort of full breakdown, right, where it's heading down and lower, that is our warning sign on a potential unwind of the carry trade. Because if you just think about it, the USD against the JPY should be strong if yen is still being, call it, exported, right? They're taking cheap yen, converting it to USD and deploying it into risk markets. Hence, the USD should be strong. But if you start getting a strong yen, that could signal that unwind where capital is retreating back into the yen for some reason, or into Japan. And that, along with the Nikkei showing weakness, also shows that the Japanese economy, or their businesses, their risk markets, are also declining. So that's that global risk appetite in decline, right? Hence, those are our two key things on watch, along with the Bank of Japan sentiment and the rate cut, or sorry, not the rate cut, the rate decision that's coming up in the next few weeks. It's basically anticipated that if they hike, it could be disastrous to global liquidity. Like, it could be really bad. So, yeah, we should probably keep an eye on that. Let's jump into crypto. Our favorite chart of the moment. All right, I've just put this really clear markup. And this is because I was doing my weekly update and took some screenshots to go in the update. It's pretty simple here. If we continue up, Bitcoin has much deeper to go in this bear market, and expect altcoins to get destroyed. They can always go down further, even if they look like they're bottoming. Believe me, just go back test previous bear markets and back test on TradingView. Just go run the replay on what happens in bear markets, and when it looks like something's bottoming, it can still go down heaps more, right, in a bear market. So this is the key signal to track, because if it keeps just trending up, we're in for a pretty deep and ugly bear market. However, plenty of room and fuel for a rally if it moves down from here. Okay, so this remains on watch for us. I'm actually going to clear these off the screen now, so we don't actually need them. If we jump into the daily on this real quick, we did get that first pullback, right, straight into the bands. Now, we want to see this coming back below the bands, right, and that's for our counter trend rally, right? Whereas if this keeps just charging up, right, it means that internal liquidity is not flowing into tokens. So I don't see how we could even expect the counter trend rally if USDT and USDC, this dominance is just charging up. Let's just have a quick look at, because I know the Wall Street hasn't opened yet, but I haven't actually had a look at these two in a little while. Right, so IBIT closed as an inside bar. Right, so we'll see if it comes down. With any inside bar, when I see an inside bar candle, I'm paying attention to the extremes, right? That's what I want to be looking at, because it just represents a range, right? So if you go on the lower time frames, it just represents some type of ranging price within a higher time frame. So it's compression, it's some type of consolidation. It doesn't look too rangy when we go here, but when you zoom out, price is contained within the high and the low of the previous week. I don't know why it does that. It doesn't let me click straight away. Right, so you want to pay attention to the extremes of the candle, especially if you got a downtrend like this, right? Okay, I'm interested in this high here, okay, because if this is a range and that range high gets swept, especially early in the new week, that could be our trigger that the liquidity's all been taken, the consolidation has been resolved, and sellers are stepping in, right? So hence I look at the extremes. Anytime we have an inside bar candle, I'm most interested in the extremes, because at the same time, we'll just jump over to Bitcoin, because Bitcoin, I'm pretty sure, did an inside bar as well, right? At the same time, in the current context, say we're considering our counter trend rally, or if you're waiting for some type of structural shift, then these inside bars are representing that potential compression. So if we get, maybe this week is another type of inside bar, right? And ideally it's a bullish bar, so it closes green, because that would start to give us some type of confirmation of a new structure high being in, right? And then if we've got these inside bars and we're bearish, considering that the structure is bearish, we want to watch for the sweep of those highs, right? Because on the lower time frame, that's the range. We've had the attempt to push out of the range bullish, and the rejection would signal that the sellers are stepping in, take control, and we'd be looking for that setup. Just have a quick, before we jump deeper into Bitcoin, let's just look at Coinbase as well. I imagine it's going to be somewhat the same as IBIT, except it wasn't an inside bar. It just swept the previous week highs, right? So we'll see how Coinbase looks when it opens up, when it trades tonight or tomorrow, for you legends out there. Because if that's a sweep, it's still closed bullish. We need to see if that sweep provides follow through, and if it wants to come down to the lows of this candle. You know, like these three charts between Coinbase, IBIT, and Bitcoin, they give quite an interesting signal. So in particular, if I load up Bitcoin over Coinbase, I'll put it in a new pane down here. I've already got it here. I'll just move it so you can see this a bit more clearly down below, right? There's a distinct thing that happens when we're coming into these major tops. You notice that Coinbase gives a bearish divergence. All right, so there it was on Bitcoin. When Bitcoin made this all-time high, Coinbase didn't, and that's a huge bearish divergence, right? I've seen it a few times throughout when Bitcoin was moving around. Let me just go on the daily. Where else did I see it? I think I saw it back here on the way down. Yeah, here. So you see there's a bearish divergence there. So it's not the cleanest signal. It doesn't happen all the time. But it's just one of those things, right? It's a point of confluence where in a bullish market, nothing should be diverging bearishly from each other, especially with correlated assets. So assets that typically move together, right? They shouldn't be, if the market is truly bullish, they shouldn't be diverging from each other. Hence, Coinbase and Bitcoin, very hand-in-hand market, very correlated market, right? They shouldn't be giving divergences from each other. And in the context of this bearish trend, like when you're clearly in a bearish trend like this, if one's giving this move and the other's giving this, then that's a high rotational warning signal. Like this is counter trend, like this is. Hence, IBIT, Coinbase, and Bitcoin. You could probably throw MicroStrategy in there as well, right? So those charts, we should always be looking at them together. I do these three because this covers it enough for me. Between Bitcoin structure, the way that I look at Bitcoin structure, the way that I look at other markets, I don't really need to look at MicroStrategy as well. I feel like I'm pretty covered on this, but yeah, you see like they shouldn't be diverging from each other, especially bearish if we're trying to be bullish, right? And you know, kind of on the inverse side as well, but not so much. They kind of move hand in hand. I haven't really noticed much of a bullish divergence between these two when one wants to lead out. Anyway, let's just get rid of that there. So right now, Bitcoin, Coinbase, IBIT, I'm not seeing any specific signal that's giving the lead on one another. Let's see how we've opened, right? So the weekly, we got our inside bar. I'm just going to straight up mark that last week high, last week low out. All right, because that immediately frames some potential setups. Now, you can notice that the weekly bands are starting to separate. The lower we stay into these bands, right? And they'll keep separating week over week. And eventually we're going to get a push into the bands, whether it's here or it's a bit lower. And remember, that first push into the bands is, you know, unless we have some really bullish price action and environment shifts, that first move into the bands is to be faded, right? Especially when the bands first start to separate. See it here, right here, here. So that's on watch for us. All right, so it's likely what you'll find is price tends to give you, you know, like kind of play out in these funny ways where certain things just align and give you confluence for a certain direction. So for example, if you look at how these bands are starting to separate, okay, and you look at how they're approaching this weekly gap, we've still got time. Now, if we get into, by the time price potentially comes up, if these bands are also at this weekly gap, like that's where you start getting those confluent signals for your potential setups, right? So I'll be looking at that and I'm going, cool, we've still got the weekly gap, first time it's being tested, the bands, first time they're being tested, and then I'm observing price action on some of the lower time frames into those bands, into that potential setup to see if I'm getting all the right execution triggers. All right, so right now, cool, we're opening up bearish. Pretty heavy bearish. Is that 2.8%? Yeah, cool. So what's on watch for me right now? If we jump out onto the monthly, I'm now going to mark out December's low. October, December, all over the joint. November lows, right? And if you look at where November highs are, we've got this massive cluster building. Q3 lows, daily structure highs still there, November highs. I'm not even going to mark them yet. They're already pretty much covered by these other levels. But a setup that that I've mentioned in the Substack that I'll put out is, now that we've got November lows developed, right, heading into the December volatility period with the potential liquidity catalysts, I'm watching this November low, and to see if earlier in the month, December comes down to sweep the lows, and then reclaim, right? Even if we come right down into this level here, which is the next major draw on liquidity, and then come up to reclaim some type of signal. But I'm just looking at this because often we get those swing pivots with consecutive monthly lows being swept. You see it here, you see it here, right? You see it here. I think if you watch back on any of my previous streams, I point out how I use sweeps, and especially consecutive weekly and monthly sweeps, because that's typically what needs to happen for price to form some type of significant pivot low or high, right? So hence we've got the inside bar now, right? My shorter term trading signals might be around these last week lows and highs, but to me, they aren't going to form any sort of major pivot trades, right? Because again, you'd have to look back on my other videos of how I look at structure, but I want to see at least two bullish weeks before I'll validate a move down after those 2 bullish weeks to give us a new high, right? So I need to see this week be bullish, and then if we have a bearish week after that and we come down and take this low, then because I've had at least 2 consecutive bullish weeks, I will use this high as a structure point. But if this just pushes straight down now, again, I don't have a new high. The high is still up here, okay? Because when I draw market structure, I want to see those 2 consecutive weeks. Or if it's just very clearly, without the 2 consecutive weeks, a swing structure point. Whereas here, where you go down, we came up for a week and then we just kept going down, I don't use this as a strong structure level. Okay, whereas here, where we go up, so we had 3 in a row here, but it meets my criteria of at least 2. That's a structure point for me. Got 2 in the other direction, into the high, and then bang. So hence, if this week, right, one setup, for example, that I would be more interested in is if this week goes bullish, okay, and then we end up being a potential sweep here into the yearly open, or here, okay, or we end up even closing bullish here, and then the following week start sweeping this week, this bullish week, okay, that's telling me, 1, I've got at least my 2 bullish weeks validating a pivot point, and 2, if we're getting that failing momentum, it might be time to start trying to catch that setup of the new weekly high forming to trade it down at least into this low, but into the new continuation lows. Whereas based on the current price action, even if I saw a really nice setup on the lower time frames sweeping the inside candle high, right, the structure's still bearish. So I am permitted in my system to take short setups. So hence, if I get that setup, I probably will be interested in some type of setup there. But if it doesn't meet my criteria to validate this being a new weekly high, it means that I'm only going to be targeting, you know, down into the other side of the range, because it could just be just more chop to build out, right? So hence, that's how I kind of approach price and the development of structure as kind of like as context to frame my trades, right? Hey mate, bit late, but I just started to follow you on here. So you're from Oz as well, good to see. Oh, nice. Legend, Hamish. Thanks for following me. Feel free to shoot off any questions or anything like that. There is a bit of a lag on here. My good mate Richard knows about the lag. So if I'm a bit late to your comments, I apologize, but appreciate you being here, Legend. So hence that kind of frames my context for how I'm looking at the chart right now, because the bigger macro positioning and the bigger, right, if this is the weekly trend to go bearish, now the bigger macro short for me is to position into this retracement to go short for continuation, right? But to validate this as the retracement in my system, I need at least 2 bullish consecutive candles. Okay, once I get my 2 bullish consecutive candles, then I'll be more interested in looking for specific setups like the sweeps I've been telling you guys about, all that kind of stuff. And then so if I get those, then I'll be more interested in this bigger continuation setup. But in the interim, there might be the lower time frame setups that appear. And again, if we're trading around just looking at last week as the inside bar, if we do get some sort of sweeps and then down on the daily in the lower time frames, there's the setup here for the short. Yeah, I'd probably consider taking that. I'd have to obviously assess it at the time. And then I'd just be looking to trade down to this last week low. And at best here, right? Because again, I haven't caught that nice development of the structure high. So it could just be chop. So that's basically what's on watch from a weekly perspective as we start the new week. Is we got an inside candle, so we've got to be observing behavior at the high, at the extremes of the candle. Now, from the bullish perspective, I probably want to see more candles develop, and then we get some type of sweep into the lows, right? Because there's still not much going on here. And actually in my Substack, my most recent weekly update, you guys will get this if you're following me there. It's all free. I'll post this after this this session. I actually lay out what would change my bias to become bullish. And I mean, if you've been following this stream, you know exactly what I'm looking for. But I point out here how the ideal scenario is something that looks like this on the weekly, where we form that lower weekly high, sweep the lows, then reverse through it, right? So if we come back to our chart here, right, what that would actually mean is we get the weekly bullish candle here, and we get that reversal setup like I mentioned just before, okay, validating this as a structure point, and it turns over. But what I would want to be happening then is as it comes into the low, right, it starts sweeping, right? So it's a sweep, weekly sweep of the low. And then that would mean that we only need to get back above here to be bullish again. Okay, and then those are the triggers I'll be looking for. Once we get back above here, that would mean that we're transitioning to bullish structure, and I'd be looking to get long on any type of pullback, right? Because that would mean the structure's shifting now, like that. And we need to do that on the weekly, because if we only do it on the daily, the weekly's still bearish, right? So if we only build structure on the daily, how the time frames work is the lower time frames typically are just structure that builds towards the higher time frames. So the higher time frames always take precedent, okay? And the lower time frames, what you want to look for is you want to look for them to start becoming in alignment with the higher time frames, and that's where you get your best trades. So what I mean by that is, if this bullish structure, see right now the daily structure high is still all the way up here, okay? Now, over the course, so I've just explained what we need to see on the weekly. If we have the bullish, right? If we have the daily, right, giving us something like this, which is then building out our weekly structure, right? Maybe it even comes up, then comes down, and then gives us the sweeps, right? Then comes back in, we start getting our daily in alignment with the weekly. The weekly should look similar, but just on a much condensed time frame. That's where the structures are in alignment, right? Whereas if we now just straight up get the daily charging up towards the highs, I'm a bit more concerned because we haven't really built a base and acceptance for price around this area, right? If it just keeps going like this, you know, it just, I don't know if maybe it's part instinct of just being in charts and looking at things for so long, where markets don't just do this, right? They need to create acceptance, let participants on both sides kind of battle it out until the market gets to some sort of consensus of, cool, we're not breaking down from here anymore, we're not going any lower, and that's it, that's our new base, and then we keep going, you know, we move on. Until something structurally changes in the asset, right? So hence, if the daily just keeps going bullish like this, and the weekly hasn't shifted yet, I have to side with the weekly, right? Because this still looks, even when I just zoom like that, this on the weekly still looks bearish to me, like that. Whereas on the daily, you'll have people going, oh, we're bullish, it's everything's changed. But on the weekly, we're not, right? That's just a very normal retracement in a bearish trend. So hence, we're looking for that alignment, right? We're looking for the daily to, you know, potentially, hence I'm not too worried about when we open the week out and we show weakness early, right? Often see that the week starts out early, maybe it creates the weekly low for the week earlier in the week, and then we come back later in the week to sweep those lows. So hence, I don't usually even really trade. Obviously, it's the weekend for most parts of the world, so it's thinner liquidity as well. But for me, being that my Monday is the Sunday for the rest of the world, I typically don't trade, especially on the lower time frames on a Monday. I'll wait till the Tuesday, because then we've had our first day of actual markets open, and we'll have our first daily lows and highs in to set the week, right? And then you'll have that kind of Monday range strategy that I think it's Trader Main who talks about that a lot. But basically, yeah, at least you've got some context starting to build in the price action early in the week, right? So we should probably just quickly look at, no, we talked about the monthly. Yeah, we already talked about the monthly and the potential setup there, right? If we're getting that move into the lows. So actually, I'll keep that on there. Just aligning with the volatility in the month, the potential volatility in the month and the catalysts. Yeah, that's where I do think if we're chopping about, maybe we create our weekly high, right? And then we potentially create our weekly high. I'll jump back onto the weekly, right? If we create our weekly high within the next 2 weeks, right, as all of our volatility catalysts are unfolding, and let's say after FOMC, say we create this high into FOMC, after FOMC we dump, what the market participants are probably going to be screaming is the rate cut doesn't matter, it's all over, right? And quite often that's the time to be bullish, especially if the price action shows us, because that would have a lot of people on X in the broader market and broader retail going, rate cut doesn't matter, the liquidity is not coming, it's truly a bear market. And at that same time, if we're coming into these lows and we're sweeping on the weekly and we're reclaiming, like that would be signs for me that we may actually be starting to potentially transition, right? So that's kind of what I'm looking at over December, is how November lows hold up, right? So how price action develops around November lows, because if December ends up resolving as a sweep of November lows and it happens to align with some of the narratives and those liquidity catalysts, then that potentially sets up Q1, as I've been talking about in previous streams, as a counter trend rally period, call it time period. Now, that's about it. I didn't really have much else planned. What we can have a quick look at for anybody interested, because I did call this out in my update that you guys will get soon. ETH to BTC from a rotational context. ETH, and this is based on if we do get the counter trend rally, right? If we don't get the counter trend rally, no altcoin and Bitcoin and no altcoin is going to do anything meaningful, right? It's all heading into bear market territory. But again, this is based on that counter trend rally. ETH is still somewhat resembling a historical pattern where we've actually confirmed on ETH to BTC rotational strength back here when our weekly bands crossed bullish, and the bands are still bullish and the price action is still very similar to previous cycles where ETH comes in and just retests those bands heavily after it first crosses. You see, you get the major breakout and then we come in to retest it, right? So to me, I'm looking at this range for a counter trend rally, okay? Don't kid yourself and think that ETH to BTC is going somewhere here, right? I'm just looking at here to here first and then here if ETH gets a counter trend rally, right? Over the course of the setup over Q1. So that this lays context for the rotational strength first and foremost. So this to me says, cool, ETH is still potentially got some juice in it if we get this counter trend rally to outperform Bitcoin, because I'm looking at it against Bitcoin. Then next up, when I go out onto the ETH chart and I actually look at it, well, again, based on my system, right, this structure was invalidated when we created this new high, and this is the weekly low. So this, to me, is internal weekly structure. So it hasn't validated the primary bullish structure yet. Yes, it's come down, but I mean, it's an altcoin. They all can come down pretty far. But structurally, this is what I call a complex pullback. So it hasn't invalidated the bullish primary structure yet. On the daily, right, if this comes into the low here, okay, then we know this is going to be our new primary high. Bullish when it gets back above here. If it comes and takes out this low, right, that's the primary high. Otherwise, this is the current primary high. This is framing up to be a stronger reversal pattern if it comes in, okay? And then once it gets above here, this is game on for pullbacks, because what we've then got is we're back in alignment with the weekly to head higher, and this specific pattern then puts the daily trend into a bullish structure again. So this pullback, whether it's up here and then here, but basically this pullback will be the pullback to long, right? And you know, we'll when we get to that, that's where we kind of forecast targets looking at liquidity and everything else. But to me, that's a pretty good setup that I'm interested in, because then when I also just cruise out to some of the higher time frames, right, to build further context on a bigger swing positional kind of trade, more of a swing trade, to be honest. I won't be buying any of this stuff with spot. I'll just be trading it with swing if I do take this setup. But if we look back here, first and foremost, there's our November low, right? So again, we'll look at that. I would suggest keeping that on the horizon as that, same as Bitcoin setup. If we come in and sweep November lows earlier in the month, okay, sweep and provide the reversal reclaim. All right, and while I'm at it, I'll set an alert on that, right? Because I want to know if November lows is getting swept. November lows. ETH testing November lows. Right, and then if we go out onto the quarterly, this is an inside bar. It's the same thing we've kind of discussed a few times. Inside bar represents some type of consolidation or compression, right? We're still bound within here. If we're trading below here, then we're bearish. If we're trading above, obviously we're bullish. Right? Now, inside bar, we've got to consider that even if we don't get the November low sweep set up, but the quarter closes as an inside bar, and we still have all the catalysts aligning for a Q1 potential counter trend rally, well, then this also opens up the potential for, in January, sweep Q4 lows, reclaim, and then we'd be trading up towards the highs again for a counter trend rally. All right. Now, the other thing I'll point out on ETH is in terms of seasonality, Bitcoin typically Q4, Q1, right? But if you look at ETH, I'll just go to CoinGlass. Right, so if you go to CoinGlass, they've got some really good data here. If you go Bitcoin returns, typically Bitcoin returns Q1, Q4, you get those highest returns. However, ETH, Q1, Q2, right? So if you just lay that as a little bit of context as well for seasonality, and then you look here into the price action and the potential setup that's forming, we've got those points of confluence. So hence, we've either got potentially, and again, this is all conditional on us getting the counter trend rally, right? That's the only way that we could look to be bullish on these. If we're just going for straight breakdown and we're not getting those liquidity signals, look, the market's selling off pretty early into the week, right? On the open. So if we do get that the counter trend rally building, right, the liquidity catalysts, etc., then these are the setups that I'd be looking at. I'll be watching the December sweeping November lows, right? Because if December even sweeps November lows and closes bullish, that typically sets up January for some type of continuation on the bullish side, okay, which would also then align with Q1 potentially being bullish. But at the same time, even if January wanted to sweep again, it would still be a sweep on the previous quarter lows, right? If it was just a sweep, and it potentially means that we could get some bullish price action into the later part of the quarter. But that, I'd say only if it does it early in the quarter, right? I'd be very cautious if it's trading below the Q4 lows like late into the quarter. Again, that's way too far out. We'll analyze it as it comes. But that's how I potentially see an ETH setup forming as well. Legends, that's about it. I hope you enjoyed the sesh. Please give us a like, subscribe, all that kind of stuff. Follow us on X if you're not following us already. Appreciate you, and I hope you have an awesome rest of your weekend and a good week ahead. Cheers, legends. Thanks, Rich. Thanks, Hamish. Take care.